Hi everybody, this is Eddie going to do a market update for next week. So this week has been a crazy bearish week. We had our double rejection right off that low right there at around that 4100. So on Tuesday, we have a huge gap up after the CPI numbers came out better than expected. So it went up pre-market, tested this high, and then dumped the entire day. And then the day after that was FOMC. So in FOMC, this time around wasn't as big as reaction as I thought it would be. Because after JP started talking, it didn't actually move that much afterwards. It still was pretty volatile, but it's just not as big as it normally is because we usually move about 100 points after we start talking, but we just didn't do that. All right, and then we just keep gapping down and down. So it's been a pretty rough week for bullish traders, but for us day traders, it was really, really good. I actually just break my own personal record again on Friday, making a huge play on Friday, looking for max pain somewhere in between that um, 3950 and 3800 area. So we actually had a really good trade right near the end of the day for end of day rally because there was about $4 trillion expiration coming through. So at the end of the day, whenever there's a big expiration like that, whenever it gets pushed through at the lower end of the spread, market makers tend to push it back up somewhere towards the max paying level, which was 3950. We didn't quite get there, and it was a lot smaller move than I expected, but we still have a really good squeeze at the end of the day, which I did profit off of it. So if we look through the minute charts, let's go in the 5-minute chart. All right, so let's start off the week right here. So we ran up into CPI. People were suspecting that CPI numbers got leaked before that because in pre-market everything just went up like crazy. Made a lot of money that day because I bought actually pre-market for that. I didn't trade any of this. I actually skipped the day because I started off the day really well. I should skip most of this, but I did trade the bounce towards the end of the day. That was the trade that I did, and I did really well on that day as well. And that big bounce back up. So that was the trade that we did, and the aggro did caught that. If we look through the aggro on that day, so you did see the aggro got a sell signal right from the top, and then there was a couple buy signals right here that caught the move at the end of the day, right? So this was a very good play for that day. And then we have FOMC. So FOMC right here. So I went in with strangles, and I told everybody to go in with strangles beforehand, like the money strangles. And the premium shot up before the FOMC actually started. So if you actually exit before then, you would have made a lot of money because I think I was up about almost double my money right into it because the calls were shooting up like crazy. I double on the calls, but the puts didn't actually lose that much value because of the anticipation of the FOMC or JP speaking. So actually I sold my calls for some money, and then it dropped, and then my puts actually turned green. It was kind of pretty crazy day for that for options trading as well. And it was a really sharp move down, but as you can see, it wasn't a big move, right? It went from 40.50 down to as far as 39.60. So that's not quite 100 points that we usually see during FOMC. Like normally when FOMC happens, there's in the last few sessions it's been over 100 points, and even on this bounce back up toward when we get our FOMC number, yeah, we have a big bounce back up, and then JP started talking and just kind of tanked, right? So it was kind of unexpected to have a move like this towards FOMC. We thought if JP start talking and then start tanking, we would normally go straight down, right? Or we go straight up. It didn't quite get that. We got this chop, right? So I think a lot of the money was anticipated with the CPI number. So most of the easy money has been done on CPI. So FOMC, that did kind of have an effect on FOMC movement. So the volatility wasn't that as big as it normally did. So I did put on some strangles for FOMC as well. And I made some money before, and then if I would have held, I would have lost money. Normally that doesn't happen on a day like FOMC. You actually would have made a lot more money if you held. But anyways, I did exit beforehand, and then after the job, I made my money back. So it was fairly good trade for me. Because I did choke profits into FOMC on the call side before going down on the put side. Right. And after that, we just got gap down the next day. And then on Friday was the big day right here. So Friday, the key levels for expiration was actually 4,000 and 3,800. So like I actually was had a really big bullish bias after the initial drop to somewhere get to about 39.50, which was the max pain level for options expiration, because majority of the puts that were bought was 3,800. Majority of the calls that was bought was around that 4,000 area. So 39.50 was the midpoint of the max pain, and that's where I thought we were going to expire there. In worst case scenario, I thought we would go for 3,900 at least, right? But that actually did not happen. We actually dropped way down to almost hit that 3,800 level, right? So after it lost 38.50, which I thought was the main support, because there was actually quite a bit of options expiring at 38.50 as well. I thought that would be the main support, but after we broke down 38.50, I know that was going to be a heavy resistance area, because that was the area where there was a lot of open interest on the options on both sides, and we broke through it, so it was kind of hard to come back up to. So this is a trade I made right here. So I traded this, and then this part right here I added, and then on the rally back up, I actually made a lot of money right there, right? I did have a big, huge panic right here because I added right here. I didn't think we would break below the 21-day moving average. So I added right here. I'll use the 2-minute chart to see it better. Right. So right here on that green candle, I added, and then it dropped. I should have took my stop loss. I didn't take it. And then I went in really heavy down here, and I almost had a heart attack. Then we finally rally up. So I took my profits up here, and then went back in right here, added back, and then I shot up to the daily 50-day moving average, which I took profits on. Right. So the daily 50-day moving average was right around that level right there, right at 38.65. So when he shot up to that level, I actually took the full exit. I did leave some lotos on, so I did give back some gains, but overall it was a huge day for me, playing just this squeeze right here. So there was one the squeeze over here that made a lot of money on this pop, and then the squeeze right here was the big one that made a lot of money on. Right, and I did share that in our Discord group about this end of day rally that was about to come, and it did rally up, but it just did not hit the numbers that I thought we would. I thought we would at least hit 3,900 at the end of the day, which did not happen. It lost steam right here, right around that resistance area right here that was previous support that it broke down from. So once you lose that level, it's become resistance. So now we rally back up, and we found that resistance and got rejected towards the end of the day right there. So anyways, that was the play for the week, and it's a rough week, but for next week, all right, so we did close below the 50-day moving average on SPX, but we are quite far away from the 8 and 21-day moving average. So there's a couple scenarios here. Right here, there's a gap that still needs to be filled. The gap fills around this level right here at the 37.50, right? 3750 is a major level, and 3700 is the next major level right here. So in between this is what I call the support zone. So this is the major support zone, and hopefully you'll hold above this level. Otherwise, if it doesn't, we're likely to want to try this bottom and then break this bottom afterwards, right? So the scenario is for next week, we either going to bounce off this level, retest this 8 and 21 day moving average, and then come back down, fill this gap down here, and then bounce back up. Or if this was going to be a bearish turn, right, we should go up here, fill this gap. This is the year of gaps because there's gaps literally everywhere on both sides. So we would fill this gap, retest it to 100, and then we get the big leg down, like straight down back to this level right here. So that could be a scenario as well. So watch very carefully how to trade this. So for tomorrow, if for next week, if we break above the Friday high, likely we're going to do we're going to come up to this gap area right here. So at 3960-ish area. So 3950, 3960 is the area to look at. That is the gap resistance, and then the gap fill is around that 3995. So let's just call it even 4000 area. And then possibly go retest that 200-day moving average again, right? So it would look something like this, right? Go up here and then come down and then get the big leg down, right? If we do it this way, then it's going to drop a lot more bull people, right? So right here, this day on CPI, I bet you there was a ton of bulls that got stuck right on this trade right here. Because we broke the 200-day moving average, we came up. There was a ton of momentum. The CPI numbers were good. I bet you a lot of retailers jump into that, thinking that we're going to break above this and go higher. Because I thought we were too, but as soon as I seen the rejection right at the high, I'm like, nope, it's not going to happen. So it just came back down, right? You can see I drew this channel that we were in this uptrend. It failed the uptrend, went up, retest the uptrend, and failed, right? So now we're start coming. This is a lower low, right? We're gonna make a lower high, and then we'll make another lower low and come down, retest this area right here. So that's the likely scenario that I see what's going to happen in the next week or two, is to come up, retest this area right here or fill the gap, and then we drop, right? So just pay attention to that. Don't get too bearish just yet. We did have 4 straight days of coming down, right? So it does need to make some kind of a dead cat bounce before the next leg down, right? So we're a little bit oversold right here. It's very extended away from the moving averages, so it needs to come up, maybe fill that gap, and then come back down. All right, let's go on with the Qs. So the Qs, this box we broke down below this box now. So this is a very bearish play. There's a big gap that needs to be filled right here as well on the Qs. And it is likely to retest the box, maybe even enter the box a little bit, and then we fill the gap afterwards, right? So right now the chart is looking very bearish, right? And I'll have a bearish bias at the moment, but that doesn't mean I'm going to trade only the bear side, right? So I am only day trading, so I am not swing trading anymore. We broke the moving averages. It's no longer valid for swing trades. I normally just swing trade the call side, not the bear side. So I am looking for a retest, maybe a dead cat bounce, and then I'll start shorting. Maybe I even buy some short-term weekly puts just to have a play on the rejection all the way down to the gap fill, right? So that would be a fairly easy play if that's the case. So look for rejection somewhere around the 28 and 21-day moving average or at the gap fill right here, right? So look for that gap fill, look for that 8 and 21 to see what happens. And if you see a really clear rejection, usually on the hourly time frame, it's a good time frame to look at. So on the hour time frame, if we get a nice rejection around this area right over here, around that 50-day moving 50 period moving average right here. So if there's a clear rejection, then it's going to be a bearish play, right? Right, so let's take a look at the VIX. The VIX is still hovering around that 22 area. So it's not too bad just yet, right? So we did get rejected off the moving averages right here at 26 level, and we came down. So, you want to look and see what happens at this set my alert right here. So if we are going to get the next leg down, you got to shoot above this level to do it. And then if it does, potentially we could hit back up above here at 35. We hit 35, that means we're gonna make a lower low on the wave. It's going to be pretty extreme if that happens, right? So for next week, pay attention to this. We might hover around between that 21 and 23 area till we get that little rally up to fill that upper gap, and then maybe after that we get the rejection, then we going to shoot the VIX up to around that 26 level and see if we go above 30. Because above 30 is going to go pretty big down move on the SPX, right? So pay close attention to these levels at the VIX, because as you can see, every single time we hit these levels, we get that bounce up. We don't go straight up, as you can see right here. We go retest that level, came down, and then we break above it, and then retest, and then shoot up, right? So that's the way the market works. It doesn't go straight up or down. It goes in waves. So right now, if that's the case, right, if we go bounce up here, the VIX will drop to around that 21, 22. And then once you start dropping, we might shoot up to that 27, 28. And then we break that level down here, and then you go flushes, then we might hit that 30 to 35 area on the VIX. All right, let's take a look at the stocks. So Apple is very bearish looking. We talked about this little triangle right here. So we broke through that with volume, right? That's pretty big volume, bearish volume on that break. It's probably going to bounce and retest that triangle area, and then we're going to come back down. And if it does come down, that 130 level is a very key level. If we break that, then we're coming down to that 110 again, right? So if you look through over here on your left side, the demand zone is right here. So if we break that demand zone, there's not much blocking it to come all the way back down to pre-COVID highs, right? So if that happens, if you come down to pre-COVID highs, it would be a good buy. I would buy some leaps down here if that happens. But don't get too far ahead of yourself just yet. It's very likely that you can hold here as well. So don't get too bearish. Look for the signals, right? Look for to set your alerts. If they break, then trade the bear side, and then if they go back above it, just take your stop and exit trade, right? Try not to trade with bias. Try to trade the action, not the bias, right? Or news. All right, AMD. So AMD makes a lower high, right, and is expected to come down some more. Most likely make a lower low, and then probably looking around that maybe this time around. Actually, let me measure that move. So you're looking at around $30 on the next leg down. So if it does get extended down, $30 you'll go down to. Probably make a stop somewhere around that $50 region, and then make a little dead cat bounce and then come down lower. So we hits $30. That's the area where you really want to start buying some leap options for like 2 years out, and it's likely you can play out really well for you if that's the case. And it wouldn't be a bad idea to also grab some shares right down here as well. So if it goes that far down, it's probably a very good opportunity to play the long game on a trade like that. And we, like I said, we haven't hit capitulation yet. So if we hit down here, I'm sure that's a lot of people will start buying. You're going to get massive volumes like this, right? That's what capitulation looks like, massive volumes like this, right? So if we get massive volumes like this over here, then that's the time to back up the truck and put on some risk, right? So Amazon is still hovering around that support zone. This is a very, very key support zone. So this is where peak demand is. So if we break that peak demand area, it becomes peak supply area, right? So once it breaks down there, you're looking at $70. $70 I would buy probably not a lot of it. Well, maybe. I would say I would allocate about 50% maybe of my maximum position at $70. And then it really breaks down. I don't think it will, but if it really breaks down to like $50, then that's where you really want to low up. Meta, surprisingly, Meta is holding this area pretty well. It's not making big moves. So I think that's a really strong sign for Meta. If it does hold right here, as long as it doesn't break below this 108 area, right? As long as it holds above that, it's likely that we can go back up and maybe hover around that between that 130 to 160 area, maybe retest the 160 area before the before leg down, right? So let's see what happens right here. If market tanks, I'm sure it can go with it, but right now it's holding pretty strong compared to the other FANG names, because this name obviously is very oversold. And so valuation wise, this is actually still pretty cheap. So it's actually holding this area quite well. And it's almost gap filled, so there's still a little bit of room to go to gap filled. Google still holding around the same area, still at the first demand area. So this will be an area that I would buy a little bit, and then this is the area where you want to buy a lot of. It's down here. Same with Microsoft. Microsoft actually holding a little bit better than the others. It tested 200-day moving average, got rejected. So that was the target that we talked about probably last week or the week before. It hit the target, clear rejection, huge volume, like huge sell volume right here. So likely we can come back and fill some of these gaps down here before, and then maybe retest this key support area to see if it holds. You can see right here, this is the top demand area. So it can come back, retest this before we go higher. Netflix, we finally got our gap fill. So Netflix, we fill the gap completely now, and then got rejected right at the gap fill, right? It's still making higher lows and higher highs. So until that breaks, it's still looking fairly good, but it's likely that it could break. They do have earnings coming up. So fourth quarter earnings is going to be a big thing. Right, we want to see how well or how bad they're going to get. If earnings are bad, I'm pretty sure we're going to get the next big leg down. But if earnings are good, we could like get that sharp rally back up as well. So that's going to be a very important thing. So that will happen in January. Right. Nvidia stronger than other semiconductor names, but semiconductors, actually, let's take a look at SMH. So semiconductor index, it's at that area that got rejected multiple times, right? So rejected, we came right back down. So this chart right now is looking fairly bearish, right? This is a lower high, right? So if things go bad, we're just gonna make a lower low, right? So, and this looks like a big area to need to break. As you can see, this is the top of the volume shelf. So this is heavy supply area. It's going to be very hard for it to break above this area, right? So this looks to me like a fairly good short. And if it does come down, right, there's not that much demand till we hit down here at pre-COVID highs, which is around that 150 area. So that could be a very good short for somebody that wants to take a longer short trade, but just want to be very careful. If he does break back above that 200-day moving average, you'll be at more risk, right? But as far as right now, this chart is looking fairly bearish, and if you want to take on the risk, you can go aim for first. I would aim for like 165, but I would probably trim. If I, let's say I short right here, I would trim at 200 just to see if we bounce off that level or not. If it does bounce, right, you can you can take some profits first, and then if it bounce and it gets rejected again, then you add them back for the next leg down, right? So got to learn how to scale in and scale out and lock in profits and protect your investment. right? That's what I do for every trade. Doesn't matter swing trading or day trading. I like free trades, meaning I like to take off risk. So say if the stock pops, I take half off. That gives me room for a stop loss if it doesn't go the way I want it. And then if it does go, I make a lot of money. If it doesn't go, I take my stop at break even or slight profit. And then you lock in your gains. All right. And the last one, Tesla. Tesla's at 150. So we're at the first support zone. So support zones between 150 and 130. It's in that area right now. It looks like it's going to continue to go. So be very careful. Short or long at this point because we are extended on the short side. We could push all the way down to 130 and then get a very sharp reversal to retest say that 170 area. So this area right here, this peak, this support that broke is going to be resistance now. So you can come all the way down, come back up, reject it, and then possibly if that breaks, then we're definitely coming back down to 100 is the first. This is a very small support at 100, and then down here is where you're looking at $60. It's going to be really bad if it comes down to $60. So this is the key area to hold. So pay very close attention to this level. If it breaks this level, I would short it. I would short it down to about 100 and then see what happens at 100. If 100 does not hold, it's coming down to 60. Yeah, so right now he's looking very, very bearish. Very bearish. But look for that dead cat bounce at that between that 130 and 150 area, right? So this is the dead cat bounce zone. So we come down, get found support say around that 130 140 area and then bounce hard and then the next leg down, right? They do have earnings coming up, so we'll see what happens at earnings. Anyway, that's pretty much it for stocks for this week. Let's take a look at the algo. So we talk about Friday. So Friday the algo did fairly well. So this is Friday. We're at the open. Let's see, we're at the opens right here. So we can see we were still in a sell signal from previous day. So that was a good sell, and it stayed in the sell signal all the way down till it hits right here till we get the buy signal this morning. That was a fake buy signal because it did have a few large bars right here. So it did trigger the buy signal and then immediately get the sell signal right afterwards. And down here, you can see that we have a double bottom right formation, and then you got a buy signal right at that candle right here, and then you get the little pop up, and then you got the sell signal after it broke back down below the moving averages, and then right here when it makes that triple bottom, it's where you got the buy signal again after this bar reversal, and then this bar right here, you got the buy signal into a close. If you use the 2-minute chart, you would have caught it right at the break point, which is right here, right? After that green candle is your buy point. So if you know technical analysis, this is the buy bar that you buy from, and then it triggers the buy right at that bar. So this is how accurate it is in the lower time frames for trend changes, right? And you can do some fairly good trades with this, right? So if you see that we made a double bottom and then we made a higher low, right? And then the buy signal came in, that's a confirmation of a trend change, right? It's higher lows and then breaking above moving averages with volume. And then, you get the buy signal on the hour. So that's where you can go take that trade. And if you caught this would have been a really, really good trade. So I did post on my Facebook group about this trade. So I told people this is time to buy some 38.50 lottos. At the time, it was trading at $3.70. It got shot up to about 18 or 19 bucks at the highs before it came all the way back down and closes around that 38.50 area. right? So you made yourself a ton of money. You would have 4x or 5x your money almost. I think 4x your money. You would have 4x your money. That's 400% in a matter of minutes, right? So I did post that for free in my Facebook group. I also posted in Discord, obviously. So hope somebody made some money on that trade and took it. Anyway, and let's take a look at the other days. So the algo on this day right here with the big trending down day, right? You would have caught a lot of money on that day as well. And then on CPI day, you would have made a lot of money. And then on the bounce back up, you would have made some money. And then um, these type of trades are really good, especially on the 2-minute time frame. So if you line up the 2-minute time frame with the 5-minute, you get a bit of an early signal at 2-minute. So if you understand technical analysis and you understand how to enter a trade, a confirmation, so you look for confirmation on the candlesticks at key resistance levels, and then you look for the signal to confirm. So right here, you can see right at the open, if you have the spot, you can see pre-market actually. So we're at the open. So we have a double top the day before, and then we came up to test the bottom of the area and it failed. So in pre-market, it failed, and then we start coming down. Right at the open is at the low. Once it breaks the low of this area from previous day, it would have been a clear short, right? So right at the open, we got shorted down, and you get the sell signal right there. And then it came back up, retest this level, 21-day moving average, and just kept going down and down and down. So the algo, even on the retest, the algo did not give you a buy signal whatsoever. So the momentum was continuing down, and it did not tell you to buy till like all the way down here, right? So you could have caught yourself some really good trades using the algo as long as you understand, right? As long as you understand how to use this, right? We do have a training video on how to use this, and we had a pretty advanced trading video as well. But that one's only staying up till the end of this December. So if you want to take advantage of it, you can definitely do that by using the 1-month subscription, and you could have access to the algo as well as the videos to train how to trade using the algo as your advantage. So anyway, that's pretty much it for this week. Next week, good luck trading. I'm actually going to take it easy now for the holidays. I made a huge win last week, and I'm just going to take it easy for the next couple weeks. So if you guys want to see what's going on with our Discord, links are in the description below. Make sure you like and subscribe, and I'll see you guys next week.